Well, hello and welcome to this midday market mood check with me, Nandita, Khemka, and my colleague Yatin, Mota. Well, Yatin, what a smart recovery markets have staged. I mean, earlier in the session, they were struggling to hold on to that 17,800 mark, and now we are heading towards that 17,900 mark. And what's aiding to this up move now is the metals basket, and banks are also not doing that badly. But let's also talk about the IT basket, of course, because HCL Tech and Infosys reported their earnings post markets yesterday, and on the face of it, numbers are pretty good given the fact that the macro environment in the US is not all that good, and there are concerns of recession and slowdown in discretionary spending by the clients, right? But you know, brokerages are pretty cautious on both the companies because both of these companies have reported good numbers, but brokerages have said that most of the revenue growth that they've seen can actually be attributed to one-offs, and the guidance that they have given largely is actually, you know, it's pretty cautious going forward, and that the growth contraction may actually deepen in the calendar year. So IT packed in focus because of that. However, Infosys has managed to get back into the green. HCL Tech under a fair bit of pressure, but still off days low. Yeah, and Infosys, Nandita, is almost at the days high right now. And as you mentioned, among the top Nifty gainers. The Q4 commentary from Infosys or HCL Tech does indicate that there is some bit of slowdown. Obviously, IT stocks have corrected in the anticipation that there will be a slowdown. Let's really see, how does the macroeconomic condition shape up with respect to the IT company client base, because there is some caution, but if there is no recession or the slowdown which is not as anticipated, probably clients will come back to IT companies given the fact that orders. Even the TCS CEO had said that double-digit growth will come back to IT sooner than later, and the commentary from him at least was pretty upbeat, even on the demand side from US at least, if not Europe. So aside of the IT basket, Yatin, among the mid caps, which are the counters that are buzzing in trade today? So, if you look at the mid-cap end of the market or the, top F&O gainer right now, that is MCX, and, some good news coming in for that one, because stock is at days high, 5.5% higher, and the reason for the stock buzzing in trade is the fact that SEBI has allowed mini contracts for non-precious metals also, which means that for copper, aluminium, or say for crude oil, a lot of other products which are precious, you can have a mini contract. And once MCX is able to launch mini contracts, brokerage do estimate that the average traded volumes might go up. So higher volumes means good business for MCX, and that is a probable reason why MCX is doing well in trade. RVNL, they got a 38 crore order yesterday, which was disclosed to stock exchanges. And ahead of the budget, we are looking at railway stocks which are doing really well, because the market sense is that government will, give a higher allocation to railways and logistics. Rail Vikas Nigam is up somewhere around 13% over the last 2 days, if I'm not mistaken. So that stock is in focus. IRFC is up 4%. So in general, railway stocks are doing well. What's not doing well is LTTS, which is L&T Technology Services. Why? Because they have acquired a business from their parent L&T, and apparently the valuations that with the acquisition gets done, and the kind of margins and the kind of working capital requirement the company will have will be slightly dilutive as per brokerages. So the market is not really happy with this particular acquisition, and hence maybe there is a steep 6% cut for that stock. Bata, Gujarat Gas down 4% each, G Shipping, Aurobindo Pharma. Some of these pharma names like Gland, Aurobindo, Granules, Laurus have been beaten down, and the continuous selling pressure is impacting these pharma names. Yatin, I also want to talk to you about Paytm. We saw a share sale coming in from Alibaba yesterday. I think they've sold 2 crore shares, right? But the SoftBank, lock-in for SoftBank is also ending on the 15th of January, right? But they'd already sold some stake back in November, right? So looks like even though the shares are trading in the green right now, but they may come under pressure next week as well. I think, if SoftBank that is the overhang, Nandita. That is the reason why a 2,000 rupees IPO, which was 2,000 and up, that stock is trading at 550 range, despite the fact that they announced a open market buyback worth 850 crores, I think, if I'm not mistaken. But whatever said and done, Alipay or Alibaba Group and SoftBank's Vision Fund, these together hold more than 35-40% stake in Paytm. And if these people are sellers, these are supposed to be long-term investors, and if these people come and sell their shares,
probably market believes that there could be an overhang in the short to medium term. So let's see. Because a lot of things would be watched for Paytm, because they have given guidance that they will break even X of the ESOP cost very, very shortly. So the performance will be watched out for. But as I was mentioning, the selling shareholders is something which will keep the stock in focus moving ahead as well.
Sure. So all in all, right now, when we look at the markets, it's not looking all that bad. Next week, we will be getting cues from Q3 earnings. We have banking, a lot of banking names reporting earnings. HDFC Bank is coming out tomorrow. The ICICI Bank next week. We have some of the consumer stocks from the consumer basket like HUL and Asian Paints that will be reporting earnings next week. So lots to watch out for next week as well by way of cues. Well, with that, it's a wrap on this midday market check. But stay tuned, because we will be back with closing bell and get you all the market action. Stay tuned.